Hello, and welcome to the Q2 25 edition of our Behind the Data webinar. These sessions are designed to take you beyond the headlines of our quarterly report, offering deeper insights and added context to help you better understand the trends shaping downtown Houston. Our goal is to keep a diverse audience informed, whether you're in real estate, hospitality, economic development, or just someone who cares about the future of downtown Houston. Today, we will cover a range of topics, including foot traffic and visitor trends, workforce activity, real estate updates, major events, and some key headlines and developments that shape the quarter. We know how important it is to have timely and actionable insights, especially as downtown Houston continues to evolve. So whether you're tuning in for the big picture or the fine details, we hope this session provides a fresh perspective. With that said, let's go ahead and dive right in. So as the weather heated up, so did our visitor activity. We saw over 10 million total visits in Q2, which was an increase of 6.2% year over year. This equates to an additional 657,000 visits compared to Q2 2024. This increase in visitors could fill up Dyken Park 16 times. Keep in mind that this is only counting people visiting downtown for recreational purposes, and this does not include employee activity. So what drove this increase in activity? Well, there are a variety of activities taking place downtown in the second quarter, including parades, conventions, holidays, concerts, sports events, and more. These major events drove increases in visitation upwards of 90% compared to the average day in Q2. This is almost doubling our normal visitor population with increases of over 100,000 additional visits. So taking a closer look at some of the conventions that had outsized impacts, we see how important the George R. Brown Convention Center is to the daily buzz of downtown. DreamCon specifically had quite a successful debut in Houston, selling over 32,000 tickets. This convention saw a nearly 65% increase in ticket sales after relocating from Austin. So switching gears a bit, let's take a quick look at our office recovery metrics. Q2 25 set a quarterly record for employee recovery, reaching 80.8% of pre-pandemic levels. Employee activity in Q2 25 was also 10.3% higher than last year. And additionally, in a separate CoStar metric looking at office recovery rates for metro areas, Texas cities are regularly occupying the top 3 spots. Along with Houston, I'm sure y'all can guess who the other cities may be. We also feature data from our 41st edition of the Downtown Office Story. This report comes from a survey sent out to downtown office properties and includes information on available space, leasing activity, industry trends, and more. This past year, some trends we identified were expansion and renewal activity, leasing activity has increased, the direct available supply shrank, and the energy sector continues to fuel broad demand. There's an analysis included in the quarterly report with some of this information, but I would encourage you all to go read the full report on our website, and it's located at the same page as the quarterly reports. Moving over to the residential market, we saw a continued absorption of new supply. Downtown Houston's multifamily vacancy decreased by 2% year over year to a current rate of 10.9%. This is the lowest vacancy downtown has seen since the pandemic and now holds a vacancy rate on par with the 610 Loop average. So despite adding an inventory of an average of 500 units annually for over a decade, it's impressive to see this level of absorption. With only one other project currently in the pipeline, we should see vacancy continue to decrease and possibly even see rents increase a bit. Looking at the chart here, you can see that since 2014, we have nearly tripled our multifamily inventory. While there are some initial increases in vacancy as new projects come online, the market has proven its ability to lease up properties and absorb this incoming supply. So we have a good understanding of our residential market in terms of the real estate. We know our inventory, occupancy, rents, etc. But what we really want to know is who is living downtown. So to try to answer these questions, we formed our first ever downtown residential survey. This project almost served as a spinoff of the Downtown Office Story, sending out surveys to direct contacts to get current, reliable information on the state of our downtown. In the first year of production, we received over 300 responses from current downtown residents about who they are and what their preferences are. We wanted to run this survey to get more up-to-date information on our downtown residents. Census data has lagged by a few years, and we want to see who is here now. The latest ACA's 5-year estimates account for 2019 to 2023. We've delivered nearly 500 new units since then, and the survey results show that 30% of residents have moved into their current residence in the last year. So we'll take a second to think about these questions, and then we'll see if any other responses surprised you. The first one is, what is the number one people choose to live downtown? So if you thought it was anything along the lines of being close to work, that's not quite the case. The top responses for this question actually centered around entertainment and dense living environments. Out of the 5 response options presented, being close to work ranked number 4. So really what this tells us is that people are choosing to live downtown because of the unique environment it presents relative to much of the rest of the city. It's not as much of an obligation to live down here, just being close to work. So piggybacking on that last question, 62% of survey respondents reported that they do not work downtown. So how do our residents commute to work? Nearly half of the respondents reported that they do not drive. So we see nearly 1 out of every 5 survey respondents primarily utilizes public transportation to get to work. Whether that's buses, the light rail, or other options, we see that many of our residents are choosing to commute by options other than driving. So how old are our residents? We see that while almost 20% of our respondents were over the age of 50, downtown has a very outsized population of young adults. Over 55% of respondents reported being 35 years old or younger. We can see in the right-hand chart that our proportion of residents between the ages of 25 and 34 is about double of the citywide average looking at census data. We also saw age trends within the question of how long they have been a downtown resident. 76% of respondents who moved downtown within the last year were between the ages of 18 and 35 years. The crowd that is currently moving downtown tends to be younger, diverse, and well-educated. So one more question to think about for a second. Where do you think downtown residents lived before moving here? So what we saw was that 63% of respondents already lived in the Houston region prior to moving downtown. There seems to be a stigma that downtown residents are moving from national and international destinations, but many of our residents called themselves Houstonians well before planting their flag downtown. Lastly, looking at the monthly rent distribution of our respondents, over 40% said their monthly rent or mortgage payments were less than $2,000. So while downtown does contain luxury type units, there are plenty of affordable options as well. So with all of that, what does our residential future look like? Our pipeline is drying up, and with the obvious land constraints in a dense urban area, where do we go? The answer could be diversification to more affordable housing. One great example of this in practice is a recently delivered project, the Warehouse District Apartments. At this property, half of the units are reserved for workforce housing. Phase 1 delivered in February last year and is already over 95% leased. Additionally, we have planning underway for a mixed-use project in Hardy Yards that will offer at least 200 additional affordable housing units just outside of downtown. A neighborhood is not complete and cannot fully function without a steady residential base to support it. While we have done a lot of great work, nearly tripling our inventory over the last decade, we still have a lot of growth potential left. So thank you all for taking the time to join us for this quick webinar presentation. Obviously, if you have any questions about this report, or if you're looking for any additional data or insights related to downtown, please don't hesitate to reach out to me. You can go in the QR code posted on this to go directly to the website where the quarterly report is featured. And we will be releasing this next report at the end of October, which will look at Q3. And this report will take a closer look at the impact of hospitality and tourism on our downtown. We look forward to sharing those insights with you then. Thank you.